Well, welcome back to Inverite Insights, a channel, the future of financial data, utilizing unique data and machine learning to redefine lending. Joining us to give us a high-level overview of the investor deck today for an in-depth view of the company, Karim, joining as always. Welcome back, sir.
Hi, Kyle. Thanks for having me back.
Always a pleasure to get you on. So I'm going to pass this over to you to walk us through this.
Absolutely. Thanks again for the time. So Inverite Insights is a AI-driven financial technology company. We provide consumer directive open banking technology that helps and empowers lenders to be able to monetize those consumers that are considered underbanked or off bureau. These individuals, these consumers are looking for credit, and traditional banking system or conventional credit scoring systems do not are not sufficient enough to be able to underwrite these consumers. So I'll pause here just to show you the disclaimer and cautionary statements. Now I'm going to be using some terms that I'll explain further on as we go through the presentation. At a high level, the company is again AI-driven software. We provide alternative data to the lending industry. It's real-time financial data using open banking principles where the consumer consents to give us access to their financial transaction history, their activity, their spending patterns, their payroll information. And we use this data to provide to the lender so that the consumer can get approved for credit that they are seeking. We've amassed over 7 billion financial data points from over 4 million unique consumer transactions. And essentially, we help businesses transact more efficiently, more effectively with their consumers through very innovative verification solutions in the areas of identity, risk management, and compliance. And I'll talk about each one of these issues in a little bit more detail as we move forward. So what is the problem that we're solving? The problem is around data. Lenders lack sufficient data in order to underwrite a large segment of the consumer population. In the backdrop of what's happening in North America, banks are not approving consumers like they used to. Credit scoring systems are, in some ways, artificially categorizing customers or consumers as prime and subprime. These consumers that are being marginalized from mainstream financial services are now going to the alternative financial services industry. These lenders need data. They need alternative data because traditional credit scoring systems are telling these lenders don't lend to this individual. So with alternative data, we're able to provide the lender with additional spending patterns, data, payroll confirmation, identity confirmation, as well as provide them predictive ability to determine whether the consumer is going to pay or likely to default. Now, in the challenge that we're dealing with in North America, that currently 90% of lending transactions that are on the grid, which what I mean is lenders who actually report to the credit bureau and the credit reporting agencies, 90% of these lending transactions are using data from traditional credit bureaus. And what it does, it leaves a large segment of the market outside looking in. They are borrowers, they're looking for credit, and they're not able to get approved. So the solution is a risk model that is based on this alternative data. We've collected, as I mentioned earlier, over 7 billion data points from over 4 million unique consumer transactions. In Canada, we have 99% coverage of the financial institutions. We have the largest coverage of any company or competitor in our class, and that's around just under 300 financial institutions. So what this allows us to do is under open banking and consumer-directed finance principles, we're able to collect information from the consumer at the time of the transaction and help the lenders validate identity for the purpose of fraud and also validate payroll, income, spending information that gives the lender comfort to be able to adjudicate a loan using real-time financial data. So it amounts to a lot of efficiencies and cost reductions for the lender rather than having underwriters sifting through bank statements, waiting for pay stubs and information such as that. How do we get this information? So we got an ecosystem of lenders out there in the Canadian universe that use our technology and they use our technology and they present it to the consumer at the time of the loan application. These lenders and partners, they provide us loan performance data from his previous loans, and through them, we're able to get data from the consumer. We put this information in through our machine learning, our AI risk algorithms, and we're able to provide the lender data enrichment as well as risk scoring to be able to determine whether this individual is a quality candidate to repay that loan. So we harness all this unique data. We take loan performance data from our lenders, and ultimately, what does it mean to the lender? Well, imagine approving more customers or approving a customer that you would have otherwise declined, or reducing defaults, knowing ahead of time that a specific loan is undue risk. Imagine understanding when is the right day to actually collect the funds from the consumer. All this is available through open banking, consumer directed banking, through our technology and the AI that we provide to our consumers. Now, over time, we're going to be doing additional integrations with other HR and payroll systems that gives us additional data. There are some lenders out there that not only want data from the bank account, but they want a copy of the pay stub. And we can facilitate that through our technology and our expertise in order to be able to get information like that to the lender. One of the questions that comes up is, where is the consumer in all this? And this is all through the consumer's consent. We are providing value to the consumer by providing data to the lender of their choice in order for the consumer to obtain credit, whether it's a mortgage, a car loan, a payday loan, a credit card. We facilitate all those credit decisions. How do we fit with respect to the competitive landscape? There's been a foray of companies south of the border that have now moved into Canada. They don't have the same coverage that we have, that we do already. But this industry, with respect to open banking and alternative data, is quite significant. In 2021, I believe it was Forbes put out an article that said the next $1 trillion opportunity in fintech is the underbanked. This segment of the population is growing rapidly, and there's more and more individuals that are on the outside of the mainstream financial system than they are previously to COVID. And through that, new business models have emerged, and we've learned a lot about conventional credit scoring systems that, at a time when governments on this side of the border as well as south of the border were writing stimulus checks, credit scores artificially went up. There was just a lot of disposable cash flow to make loan payments. At the same time, lenders were providing their consumers with loan forbearance or deferral programs. And what this has done is that it's somewhat contaminated credit scores from really being reflective of the capacity of the consumer to be credit worthy. So alternative data, basically information with the consumer spending patterns, validates a lot of this information, which is how much does a consumer get paid and when? What is their spending patterns? How much money is left in the middle of the month, at the end of the month, to facilitate loan payments? What is the disposable cash flow, for instance? So this is the environment in which we are operating, and lenders are looking for fast, efficient, alternative data because their business models is to put good money to work to earn returns on the risk that they're taking. So this is the competitive landscape. Flinks and Inverite are Canadian-based companies. Plaid and MX are US-based companies that are doing some business here. And as you can see, our business model differentiates us from our competitors, not just providing the data, but an important point to note is, as part of the February 2024 federal budget, the Canadian government is going to be endorsing a framework for consumer-directed open banking, which is going to create a fair competitive landscape for fintechs as well as banks to be able to cooperate in providing solutions and services for these consumers whose the data ultimately belongs to. So how do we make money? A consumer goes to a lender. that is a customer of Inverite, uh, information is requested from the consumer's consent by the lender in order to provide data back to the lender to approve the loan. In this particular instance, there's a transaction revenue model where we are now providing information and getting paid for providing data to the consumer. So we're essentially providing reports, data to the lender, very akin to the credit reports that a lender would get from TransUnion or Equifax. But this is based on alternative data that is more forward-looking and predictive versus credit bureau data that is looking in hindsight about what an individual did 3 months ago, 6 months ago, at the time of their divorce or the sickness, or potentially even job loss, right? So the bank account data is more predictive. What through this data that we're providing and the loan performance data that we've got from our lending partners, we've developed AI and machine learning models, data science models that can predict the probability to pay or default. And we have now the ability to provide very customized risk model as a service for our lending partners. And that's the additional revenue that will augment our traditional transactional revenue and subscription revenue that we get from our platform. From a product perspective, our products are providing solutions to the lending community for the credit economy to include consumers who are otherwise marginalized. We provide real-time data and we have unparalleled data science models that our lenders are using as the secret sauce to put their capital to work. We have instant bank verification, which is the raw data pull that comes from the bank accounts. We validate the ID and the age of the consumer. And we also provide a risk score upfront. So what we're doing is improving on the quality of the loan that's being onboarded by the lender. We provide a micro check, which is a database of lending that happens off the grid through payday loan companies or non-registered loans that do not show up on the credit reporting agencies or the credit bureaus like TransUnion and Equifax. And we provide data enrichment. By that, I mean, there are lenders out there that want to know the mean balance few hours after the payroll goes in. Imagine knowing when the right date is to actually pull money from the consumer's account to avoid NSFs. And obviously the risk management as a service, which is a customized risk model based on specific lenders. In the future, we're going to be moving towards a solution for the consumers, working with our lending partners to provide funding capabilities for the consumer, additional products for the consumer that allows them additional opportunities to be able to use their data to get products and services that are more customized for what their intent is. We can show them through additional AI solutions that we have how they can improve their credit with respect to the mainstream financial institutions that use the credit score as a mainstay of credit adjudication, and we'll be able to provide additional rewards to the consumers for their transactions and loyalty to us as well as our lending partners. Over the course of the last couple of years, since 2021, I should say 3 years since we acquired Inverite Technology, this graph is showing our growth, both in terms of merchants or lenders on our platform using our software, as well as the transaction growth. So you've seen 30% year-over-year growth during COVID, and since then, the company has also pivoted and focused a lot of our energy in this business model, reducing our costs, and some of our initiatives so we can focus in the area of the business that is that the market and macroeconomic factors are actually conspiring to help us, because consumers are being pushed outside of mainstream banking. Conventional credit scoring systems are not as relevant as they once used to be. Consumers are being marginalized. Open banking is now coming to the forefront, with the Fed sponsoring both in Canada as well as the US. And so we're seeing a lot of growth in the alternative financial industry. These are the milestones that we've achieved over the last little while. Just move on to the capital structure. And I'll pause here for a few seconds to give the audience an opportunity to kind of look at the warrants and some additional information with respect to our market cap and insider ownership. So almost 50% of the outstanding shares are controlled or held by close board members, shareholders. And so we've got very active participation from management and insiders on this front. And that concludes the presentation, Kyle.
On that note, I definitely appreciate the clarity, and we'll pass it off to the viewers. We'd love to know what you think, and consider subscribing for catalysts as they come down the wire. Of course, we're going to bring it to you here, but on that note, we look forward to catching you in the next one.
Thank you, Kyle.